Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Wednesday, December 13th, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. Just a reminder, backtrack a little bit. Over the last couple of months, we had a long-term sell signal about 2 months ago when we settled below this channel bottom that's well above the market at 274.74. For the first few weeks, we are anticipating this channel bottom that is now at 170.72. But along the way, after forming that low, the market actually, do we have it illustrated anywhere today? Yes, we do. This descending 1/3 speed line came into its existence following the October low. It contained buying pressures for a week. Then we settled above it, and that set off a 3 to 5 week buy signal into what is now the 256.75 to 262.35 region. Now, we may be off of that signal now because we did close just below this channel bottom that today is at 237.97. Now, it was by a hair. 237.01. I'm showing the settlement. I think the channel was a 237.26 or 29. It was by a close margin. I'm not hedging on or discounting the sell signal validity of it. A sell signal is a sell signal when it comes to these 2 to 3 week formations. So if you exit a long position, if you went short, I don't have qualms with that, but you and I would agree that we could quite easily gap right back above the 237.97 formation on Wednesday. And if so, that could set off a follow-through rally. I'll get to that in a moment. But assuming we open below 237.97, that sell signal remains intact. I do want to see another day of downside to sort of confirm this sell signal, if you will. But 223.35, I think, is a realistic 3 to 5 day downside objective. And this 214.24 channel bottom in reach over the next couple of weeks. On the way down today, assuming we open below 237.97, 230.33 is in reach and likely to contain intraday selling pressures. If we break 230.33 today, we could, by the closing bell, test 223.35. Where a daily low can be placed, and we may come off of this formation through the rest of the week. I don't know about rallying back to 237.97 over the following several days. That is certainly possible, but this could slow down the descent. We could bottom out here on a daily basis, bounce off of here, back into the 230s, pick your point in the 230s within a day, 2 or 3 of doing so, but also know that if we were to close below 223.35, and that's not going to happen today, but if over the next few days we do, we're just another 1 to 3 days from testing our targeted 214.24. At 214.24, this market can bottom out through January. It's a 1 to 2 week objective right now, in reach by the end of December, able to absorb selling through January, and from here we can round back up again, perhaps over the following 3 to 5 weeks into this 256.75 to 262.35 region. One more thing about 214.24, that if over the next couple of weeks we close below it, it's a pretty meaningful go with sell signal through January. I would then anticipate that 172.24 descending channel bottom within 3 to 5 weeks of closing below 214.24. But getting back to really the next week or two, Continued daily settlements below 237.97. There really is nothing to do but either be out of the market or short the market. 3 to 5 day swing traders playing the short side down to 223.35. 1 to 2 week swing traders playing the short side down to 214.24. Over the next full week, this area converges anyway in the upper 210s, FYI. Let's cover the upside today. If we push or open today above 237.97, that 242.16 level in reach, likely to contain intraday buying pressures. If we push through 242.16, 248.27 not out of the question, but I don't expect this. What could happen is we push or open above 237.97, we test 242.16, that could be it for the day. And then if we close today back above 237.97, then I would expect 248.27 within a couple of days. And yes, if we close back above 237.97, I would then re-engage the 256.75 to 262.35 region as, once again, a realistic 1 to 2 week target. So 237.97 still has pivot point qualities over the 1 to 2 week time frame. We did close just below it on Tuesday. We are in sell mode. I do want to see another day of weakness. I would like to see a lower close on the day below 237.01 to sort of confirm, if you will, this 1 to 2 week sell signal. But once again, if you exited a long position, if you entered a short position based on Tuesday's settlement just below 237.97, I don't have a problem with it. Just know that we could quite easily gap right back above 237.97 today. And if so, 242.16 is likely. And once again, if we close above 237.97, I am then re-engaging the 256.75 to 262.35 region as a realistic 1 to 2 week target. We're so close to the settlement below it that there is the possibility of a downside head fake where people begin, entering short positions, and then we gap back above it and short cover rally into the, upper 250s, low 260s by the end of next week, perhaps, where I might add we can top out through all of January and fall away from here. As I've been mentioning, this 256.75 to 262.35 region able to contain buying through January, and once tested, we could fall to the 214.24 formation within 3 to 5 weeks of doing so. And inversely, as I've been saying, once we test the 214.24 area, if we test the 214.24 area over the next couple of weeks, we can round back up within 3 to 5 weeks of that into the 256.75 to 262.35 area. So if you've done nothing and you're itching to go short, I think you can anticipate, a lower settlement on the day. I think is good to go to the downside. If we close back above 237.97, I think you can jump back in the salad again, saddle, not salad, to the upside. A 1 to 2 week rally then expected to 256.75 to 262.35. I think I've said all there is to say for Wednesday's test. I'll be back, of course, tomorrow with Thursdays. Please click like, share, subscribe, and check out wickedstocks.com for that 5-day free trial we offer up front. I'll talk to you soon.